SwayamPrabha. Digital India. Educated India.
Welcome, dear learners, to yet another lecture of the course Fundamentals of Public Economics. We have dealt in detail regarding the various aspects, the subject matter of the subject of public economics, be it taxation, expenditure, debt, deficit, everything we have dealt with. A lecture prior to this, we have also discussed the budget. The things that are kept in mind while preparation of budget, how the budget has been prepared, especially with respect to India, what are the funds from which the government disburse the public expenditure, whatever is committed in the budget. So, today we'll discuss an important aspect of public economics and policy measure, and that is the center-state relation in terms of fiscal federalism and federal finance. So let us start today's lecture of federal finance. Today, I'll be covering the following topics: the meaning of federal finance, fiscal federalism, principles of federal finance, allocation of resources, the emergence of finance commission, and vertical and horizontal devolution, especially with respect to the latest, that is the 15th Finance Commission, that is still functioning till the year 2026. So learners, let's start today's lecture. See, India is a federal structure. We all know what is federal. Federal basically means that if there is hierarchy of government, and in this hierarchy, there is division of power and of resources, it is called a federal structure by definition. So, as far as India is concerned, we know we have a federal economy in the sense at the topmost level we have center, then it is state, then it is local government as municipalities and panchayats. Rather, under local we have panchayats and then municipality. So, what do we see? There are various levels and layers of government in an hierarchical order, amongst whom there is distribution of power, there is distribution of resources, there is distribution of function. So, India is a federal structure, clearly seen in the different level of government. Because what we understand is that federation is not something very static or rigid concept, because there is no set model of federalism. Meaning of federalism is clear, but as far as the model of federalism is concerned, there is not much rigidity and it is not very static in terms of the definition of federalism. If in words of Professor Sir Robert Garson, we see, he defined federalism as a form of government in which sovereignty or political power is divided between center and local government, so that each of them within its own sphere is independent of each other. That implies what? That implies that basically in different layers of government, the division of power is there, and at each level, the government enjoys its autonomy. It is independent in its own sphere. Howsoever, I would say that in India, certain amount of autonomy is still there, but still lacking. So, many a times I called it as a quasi-federal structure. So, federal finance means, as we have discussed, division and coordination. See, it is not only division of power and division of functions and division of resources, but also coordination of different items of income and expenditure between center, state and local government. If in words of Professor R.N. Bhargav we see what he defined federal finance as, that federal finance refers to finance of the federal as well as of the state government and the relationship between the two. So, federal finance to a larger extent also requires fiscal federalism. Fiscal federalism is basically how the finances of the federal are being managed. And these finances, these levels of government, these division of power, division of resources will be well managed if we have fiscal cooperation. That means different levels of government with different division of functions and resources should cooperate in a manner so that the finances of the government are well managed. It is not only the finances. When we talk of fiscal cooperation, it is also the interpersonal relationship among different levels of government. So, it is not only fiscal cooperation, but when we talk of state, all the states are at par. It is also fiscal competition, because when the division of resources would be there, so states are competing on various parameters so that the funds what they are getting from center, they should get a larger share. So, it is not only cooperation, it is not only federalism, but also fiscal competition. Now, there are various principles that should be kept in mind, that when we talk of fiscal cooperation, when we talk of competition, when we talk of federal finance, these principles help to build these concepts at a better level. First and foremost is the principle of autonomy and responsibility. See, when we talk of the principle of autonomy and responsibility, what does this mean? Every state, every level of government in its own sphere should be independent. Independent basically means that the government should have the control, should have the decision making authority as to what are the various sources through which it can raise revenue, how it can raise revenue, because if allocation of resources are given to states that these many taxes would be collected by state and these by the center, then how to collect those taxes, how to execute those taxes, how the public expenditure of the state should be well managed. So, the levels of government should have a autonomy. Not only autonomy, a sense of responsibility should be there. Sense of responsibility basically means that the government should be liable for its decision, should be accountable for its decision. Whatever resources are being raised and whatever they are spending in terms of public expenditure, that should be spent through a proper cost benefit analysis. Then comes the principle of uniformity. Uniformity basically states that all the funds that are given to the government, all the states should be taken as uniform so that there is equitous distribution of funds. All states are same. The central tries to uplift and bring all states at par. Then there is principles of means, adequacy of means and flexibility. The resources so with the state should be adequate. The resources so with the center should be adequate. The resources with the local government should be adequate. That means the resources available to the government in terms of receiving revenue, in terms of income of the government, the resources should be able to meet the expenditure, and these resources should be flexible enough in the terms that a slight alteration in these resources can alter the government's revenue. If the government wants that there should be adequacy of means, that there should be flexibility, uniformity, it has autonomy and responsibility, that implies what? The cost of collection of these resources, the cost of expenditure should be economical and efficient. Whatever way the government is managing, see, every tax that is imposed by the government has a certain amount of cost of collection. So it should not be a case that the revenue collected from the tax is very high, but the cost incurred for collection of that revenue is higher than that. Then what would the government do? The yield would not be sufficient enough to finance the expenditure. So there should be administrative efficiency. The administration of various sources of revenue, the administration of the public expenditure, the maintenance of government levels should be economical and efficient. Then comes the principle of equity. Equity we have discussed earlier also. Similar circumstances treated similarly, dissimilar circumstances treated dissimilarly. See, there is a difference between equality and equity. Equality is distribution, doing, suppose if you have 100 rupees and there are 10 people, you are distributing this 100 rupees as 10 each. That is equality. Howsoever, if you want all the 10 people to be at par, you are giving them the amount of money that is lacking with them, so that every individual could have the same level. So, similar circumstances. So, basically equity is kept in mind while the distribution of resources among the states is done. The weightage are assigned to the various parameters, to the various variables on the criteria, so that all the states should uplift themselves. So, the principle of equity requires to be identified. Then integration and coordination should be there. The government should work in an integrated and coordinated way. Therefore, should be proper communication, there should be proper reporting. Every quarter the government submits its various accounts and where it has spent the money. So, integration and coordination is a must for appropriate functioning of federal finance. Then comes the principle of transferences. Transferences basically means the amount transfer from center to state government, how they are transferring in the form of transfers, in the form of grants, in the form of loans, what are the various sources, what are the various methods, what is the procedure they are following, what is the cost of that procedure. Then the principle of federal supervision. Federal supervision is basically, as we say, central government act as a custodian, as a guide, as a parent, as a shelter to various state governments. So, a federal supervision should always be there in terms of the revenue raised, in terms of the expenditure that the states are doing. Even there are few taxes that are levied by the center, collected by the center, and then they are given to state. As a custodian, as a guardian, the center does so. So, there must be federal supervision. Then comes the principle of accountability. Accountability basically means whatever at any level of government, whatever resources they are using, they are spending, they are accountable for that. Whatever functions they are delivering in the form of health, for education, for provision of public good, any other kind of community service, economic services, be it center or of state, it is accountable for every and every expenditure, what they are incurring. And budget is such form, that clearly gives an accountability of the government, of the center. States also have to submit, various departments also have to submit. So basically these principles, if implemented, executed properly, the federal finance, fiscal federalism would definitely enhance. But this does not happen. There are few problems that creep in federal finance. Now let us quickly discuss what are those problems. The problem of imbalance or the problem of federal finance. See, there exists a gap between needs and resources of the state government. State has functions to deliver but have limited resources. So, for various functions of health, for various functions of education, the state requires funds, and the taxes so given to states are limited. The resources are more with the center. So, there exists a gap between the need of the state and the resources so available to each state. Furthermore, what happens is that performance of every state is different. The resources rate, the fiscal discipline adhered to a state is very different. Each state varies in this. So, there exists a gap between the need and the resources so raised. That slowly was becoming a problem in federal finance as to how should we allocate the funds so that this need and resource gap be filled up to a certain extent. Then was the question of state autonomy. The states always felt that okay, federal supervision is there, but we have someone on us. We don't have a clear-cut autonomy while taking the decisions of raising revenue, of expenditure. That means, furthermore, what the state felt was, as we were dealing in public debt, we have discussed earlier as well, that states cannot raise loan from international agencies. It is the center. The capital market is there, but they have to seek permission as of no loan is pending on them from the center as well. So, states feel that they don't have autonomy on various fronts. So, many a times this creates a friction between the center and state. So, the question of state autonomy holds importance. Then the problem of regional imbalances also enhanced slowly with the passage of time. Now, what is the problem of regional imbalances? What we see? Basically, the problem of regional imbalances says that, as I told you earlier, that every state have a different performance. Every state shows different progress, different development. The resources available in the form of even natural resources, the locational advantage or disadvantage to a state is very different. The type of people residing in those states, the composition, the structure of population, the measures so adopted, the execution of various policies so adopted by the government is different in every state. So, because all these things are different in every state, so many a times these lead to regional imbalances. In few states, see, whenever we travel by road or we travel to a different state, entering into a state would make you feel and give you a glance of the economic growth and progress of that state. The type of infrastructure, the type of facilities, the type of market available, the type of people, everything, even the level of digitalization differs. So, states have a problem of regional imbalances, and so is the allocation of fund, that how should the problem of regional imbalances should be catered. And somehow the importance of Finance Commission was also at a little stake. Although the Finance Commission, being a constitutional body, has now been establishing and making changes and continuously making recommendations. We'll be dealing with the Finance Commission later in this part of the lecture. Another problem was the problem of non-correspondence in a federation. That means the correspondence between center and state was not appropriate. They were not working. See, certain norms that should be kept in mind would have been like center and state government should financially be independent within own sphere. However, this was not happening. So, a correspondence was lacking. The center as well as the state was not appropriately financially independent within their own sphere. Second was there should be equitable and just allocation of benefit and sacrifice. The share of taxes, the contribution so given, funds transferred from center to state, all should be with the purpose, with our objective that it should be equitable and benefit and sacrifice should be done. Same just by the states. Adequate means at the disposal of the federal, state and local government to meet their requirements. Obviously, non-correspondence gap was there between needs and the resources so available. So, the means were not adequate at the disposal of every layer of government so that they can fulfill properly what their requirements were. Furthermore, special attention to be paid to the financial needs of relatively backward or poorer state. As I told you, there was not just distribution of income. The development level, the progress level at every sphere of government was very different. So, a special attention was required for backward and poor state so that the principle of equity is not violated. Furthermore, this should be ensured that division of resources should be flexible, that as and when required for the equitable distribution, the resources can be diverted and rediverted. Center and state should collaborate to ensure maximum utilization, but this lacks at various places when the government and state and center level are different. So that economic growth is there, reduction in disparities between region and people are there. But to certain extent, this division, this collaboration at various points, the differences would be there what we see. The few suggestions for improvement of federal finance, that is the financial resources should be compatible with administrative responsibilities. You are liable for whatever financial resources you are getting. Steps should be taken for narrowing the interstate disparity. Center should give up those functions which strictly belong to state. That means the interference should be reduced so that the state gets more autonomy. The decision making power with the state is higher. More autonomy is required in financial matters because many a times state feel like we are not getting an appropriate autonomy in various financial matters. Although we are earning the resources, but we are not getting the autonomy. See, when GST was imposed, what was the biggest pain that was felt by the states was that many taxes subsumed in GST, and those taxes were giving revenue to the state. Now, what to do? The compensation was there for 3 years by the center, but after that, how will the state cope up with this? So, Permanent Finance Commission should be established with its own secretariats. So, these were the few suggestions for improvement. Now, the improvement was taking place. The problem of non-correspondence was also gradually being dealt with. But the biggest challenge was allocation. As far as it is federal cooperation and competition and finance. So, allocation of resource between center and state, how this is done in federal finance. Let us know this. See, under Indian Constitution, there is threefold distribution of legislative power. We all know this. Between center and state, how it is done? Center list, state list and concurrent list. Center list is basically specifically for the powers and allocation which specifically belong to center. State list is for the state, and under concurrent list it is a share of both center and state. So the financial relations, if we see, of center and state to a larger extent, it deals with these four aspects: that how taxes should be distributed between center and state, the loans so given, the grant in aids, and the transfer from center to state. Let us do this one by one. First and foremost, the distribution of taxes. See, when we talk of distribution of taxes, there are specific taxes. I am not taking all the taxes, but I am mentioning a few to give you an idea that these taxes belong to center, these taxes belong to state, and there are certain taxes that are imposed by center, revenue so collected and are given to states. So, I have categorized the distribution of taxes in these three parts. The first and foremost is union or center government tax. Taxes on income other than agricultural income is basically nothing else but income tax. This is given to union government, center. See, we all know as per the Indian Income Tax Act, our income is divided into 5 categories. One is salary, the other one is income from business and profession. Next is your income from house property. Then we have capital gains tax, income from capital gains, and other sources. All these 5 incomes have different ways of being taxed because income itself is a very exhaustive concept. So, what the Indian Income Tax Act 1961 has done it has categorized the income in various categories so that if the government wants to benefit certain section, certain part of income, it is not that a common income is benefited by that. Salary is basically what we get, an employee-employer relationship is there. So, our income is taxed according to that. Various slab systems are there. We have discussed it earlier also in the form of direct taxes when we were going through it. Then we have business and profession. Business is basically trade and commerce, what a firm, entrepreneurs, because in law, in eyes of law, and business or a corporation or a company is a separate legal entity and the profit so earned is taxed. So, any income from business. Then we have profession. Profession basically means say if I am a teacher, I am working at present I am working in a college and I have an employer-employee relationship that goes with the salary. If I would not have been a teacher teaching in a higher education institution, rather I would have been running my own coaching center, or I would have done as a private center, I would have doing all the things, then it would have been the business income from the profession. Or a doctor, if it's serving, suppose in BHU hospital if a doctor is serving, or in any government owned hospital, if the doctor is serving, then it is a salary relationship, that the income is in the form of salary. Although if he or she is doing a private practice, then it is income from profession. Similarly, with the case of lawyer or an architect or a CA or any kind of, if this income from profession is income out of the intellect, not having an employer-employee relationship. Then we have house property, if a house is given on rent. Capital gains, buying and long-term, short-term, buying and selling of equities, share, bonds, funds, then property, any kind, that is goes in capital gains tax. Income from any other sources apart from these sources, any other source. So, that is taxed by the central government. Then we have corporate tax. Corporate tax is also by the central government on the companies, on the firms, as I told you, that is the corporation tax. And we all know income tax is taxed at a progressive rate. However, corporation tax is taxed at a flat rate or a proportional rate. We have dealt with this. These are direct taxes, both the taxes. Or I have not categorized under union or central taxes as direct and indirect, but just to give you an idea that the categorization of taxes, whether direct or indirect, are specifically to the center or the union. Then we have customs duty in the form of tariff and quota. We have customs duty on export and import. Excise duty is basically on production, except alcohol, liquor and narcotics. All excise duty is taxed by center. On alcohol, liquor and narcotics, it is taxed by state. Tax on sale and purchase of newspaper and advertisement therein is by the center. Then we have tax on railway freight and fare. It is by center. When we are traveling, the railway tickets we are purchasing, it is all goes to center. These are few state taxes. State taxes as land revenue, the revenue so generated out of a land, the income so earned out of a land is land revenue. Taxes on sale and purchase of goods except newspaper goes to state. Now many taxes have been subsumed in GST, but few still exist, like VAT on various products. VAT is basically value added tax on various products on sale and purchase of goods, but newspaper goes to center. Taxes on agricultural income, land and building. See, taxes on agricultural income is tax free. We know the state does not charge any tax on the income that is agricultural produce, but you know, there is very interesting thing that agricultural income is only taken for rate purposes. Rate purposes in the sense, suppose an individual has an income of say 20 lakh, and in that 20 lakh, 10 lakh is your agricultural income and 10 lakh is your normal income an individual is getting, maybe out of business, maybe out of profession. So as an individual, what would I say? I would say, okay, 10 lakh is my agricultural income, that is exempted by the state government, and now the income tax should be imposed on 10 lakh rupees. But Ken Raj committee came and they said ki for partial integration, let us include agricultural income for rate purposes, because if I talk of the income tax slabs as of 25-26 budget, like in this first 4 lakh would be exempt, next 4 to 8 lakhs would be 5%, and the remaining 2 lakhs, that is 8 to 10 lakh, because the total income is now 10 lakh, would be 10%. But what they did was, they said, okay, your total income is 20 lakh, out of that first 10 lakh we are exempting because it is agricultural income, and the next 10, now what would happen? The next slab would be 11 to 12 lakh would be 10%, 12 to 16 lakh would be 15%, and 16 to 20 lakh would be 20%. Now, if we calculate the amount of tax, it would vary. In this way, for rate purposes, agricultural income is included. Therefore, I have written taxes on agricultural income, land and building. Now, excise duty on alcohol and liquor, we have done this. Excise duty except alcohol, liquor and narcotics, it is all by center. These are by state. State is earning huge amount on excise duty on alcohol, liquor and narcotics. Then tax on consumption and sale of electricity, specifically to state. Electricity is a state issue. We all know that when we go for meters for, although there are two rates for industrial consumption and for domestic consumption, the per unit rate varies, but it is a state subject. Stamp duties, except those mentioned in union list, is with the state. Taxes on luxury, including entertainment, betting and gambling. Everything goes with the state. So, luxury tax, see many a times you must have witnessed that a movie goes tax free. Then the ticket of that particular movie, the price of the ticket reduces. But in a specific state in which it goes tax free, in other states the price remains the same. So generally those taxes who are state subject, every tax that is a state subject have different rate of taxation. So the entertainment tax on movies, on specific shows, if we are going to watch that show, we are going to watch certain things live, those are the tickets would have the tax that would go to state. Betting, gambling, everything. Then the tax on vehicle, basically the registration charges when we buy a two-wheeler or a four-wheeler or any kind of vehicle, then whenever we buy, the charges on vehicle are very different because the registration charges in every state varies. Further, there are few taxes that are levied and collected by union, but these are assigned to state, like the duties in respect of succession of a property other than agricultural land, the inherited what an individual gets, the state duty in respect to property other than agricultural land, and taxes other than stamp duty on transaction of stock exchange and future market. So these were few examples that these are levied and collected by center, but they are later on given to state. So allocation of fund as far as taxes is concerned, there is a clear-cut demarcation between center, state and different authorities, how these funds are allocated, what are the various sources of revenue. Second important thing is loan, that is the debt. Public debt we have dealt in detail. The center can take loan internally as well as externally. But when we specifically talk of internal loan, the center and state both can take loans raise loans from the internal body of the economy. However, the states can raise loan independently in the capital market. They can raise, but they have no outstanding loan from the central government. As I told you, internationally the states cannot take. From the capital market they can raise loan, but no outstanding liability on state should be there as far as center is concerned. So that is the case with the resources in the name of loan. Next is grant and aid. In order to remove, we have talked earlier that every state's the development, the progress level is different, inequalities, regional imbalance do exist. So in order to remove these inadequacies of states' resources for meeting the responsibilities in respect of social services, welfare services, various constitutional provision by the Finance Commission is made for the grant and aids to the state for various development purposes to finance such products. So grant and aids also serve as a source to the state government. Now, how these taxes are allocated, what are the basis of transferences? As I told you, constitutional provision is there for allocation of resources. This center state fiction that was emerging, the concept of non-correspondence that was creeping in, the regional imbalance, to deal with all this allocation of resources, problem of non-correspondence, existence of Finance Commission came up. See, as far as Finance Commission is concerned, there are few articles that gives the constitutional power for allocation of funds, for allocation of duties and responsibilities. So these are the few articles that are relevant and important with respect to Finance Commission, which includes Article 268, 269, 70, 71, 271, 272, 275, 279, 280 and 281. Quickly, we will see what each article is composed of, as to which article gives what power to the Finance Commission. Articles 268, the duties levied by the union but collected and appropriated by the state, such as stamp duties. These are levied by the center government but collected and appropriated by the state. Article 269 basically deals in taxes levied and collected by the union but assigned to state, like sale of purchase of goods. Article 270, taxes levied and distributed between center and state. All taxes and duties referred to in the union list except duties and taxes referred in 268 and 269 come under Article 270. So, basically 270 gives the major power for distribution of resources between center and state. Article 271 deals with surcharge on certain duties and taxes for the purpose of, specifically for the purpose of union. Article 272 used to exist, but it has been repealed in the year 2000. Article 275, grants from union to center. See, for every allocation, there is a constitutional provision and the Finance Commission because Finance Commission is a constitutional body. 279 is basically for calculation of net proceeds so that the amount of transference can be determined. Article 280 gives the power for the appointment of Finance Commission by the President every 5 years. See, Finance Commission comes for every 5 years, for a span of 5 years. So, Article 280 is the article that is responsible for formation of Finance Commission by the President. And Article 281, recommendations of the Finance Commission, because recommendations of the Finance Commission are given. Till date, we have 15 Finance Commission functional, and the recommendation, the 16th Finance Commission has already been formed. So, after 2026, the 16th Finance Commission would be functional. So, basically, what is Finance Commission then? It is a constitutional body set up under Article 280 of the Indian Constitution. It is formed by the President. Now, on what aspects does Finance Commission recommend or gives its proposal or suggestions? These aspects include, first and foremost, distribution of net proceeds of taxes to be shared between center and state as per Article 270. Now, what does net proceeds mean? We have discussed that center have higher resources. Center serves as a guardian, as a custodian. Center provides a federal supervision to the states so that the disparities of income, the regional imbalances could be reduced. The principle of equity should be maintained. For this purpose, from center's total income tax and other tax collections, certain amount is transferred to state. See, from the gross tax revenue of the center minus cess and surcharge. So, the net proceeds of the center, a certain percentage is transferred to states. Now, this transfer from center to state, from a higher government to a, which is at a hierarchical level is higher in the federal supervision, to the next level of government, this is called vertical devolution. So, vertical devolution is basically transference from center to state. The other principle, that when this amount is transferred from center to state, then how should this amount be distributed, because all the states are at par. Then how this amount transferred should be distributed between the states. That is called horizontal devolution, horizontal division. Principle which govern the share of each state in divisible pool, and principle which should govern the payment of grant in aid to the revenue of the state. That goes with Article 270. So, basically aim is to reduce the fiscal imbalances, that is the gross state domestic product, vertical imbalances and horizontal imbalances. Apart from this, any other matter that is concerning financial relations between union and state that needs to be dealt in by Finance Commission. As I have told you, already we are into 15th Finance Commission, which is till 2026. So after 2026, we'll have 16th Finance Commission. Just to make you understand what is vertical and more so ever what is horizontal devolution, I'll give you an example that is given in the 15th Finance Commission. See, in November 2017, the 15th Finance Commission was constituted. The chairman of this 15th Finance Commission was Mr. N.K. Singh. This commission was constituted to give recommendations, as I told you, on transfer of resources from center to state for the 5-year period. The first report consisting of recommendation for the financial year 2021 was tabled because it was an interim report. In February 2020 it was given, and the final report had the recommendations for the period of 21 to 26, and it was tabled on 1st February 2021. The 15th Finance Commission had chairman as N.K. Singh. The secretary were Mr. Arvind Mehta. The members included Shashikanta Das, Anup Singh, Ramesh Chandra and Ashok Lahiri. So these were the members, chairman and secretary of the 15th Finance Commission. Now what I was talking of was vertical devolution. That means the share of state in central taxes. Fine. Now in 14th Finance Commission, this share was 42%. That means of the gross tax revenue of the state minus surcharge and cess, that is the net proceeds what the center would be getting in the form of taxes. Out of that, as per the 14th Finance Commission, 42% was to be transferred to state. The 15th Finance Commission, because in 13th it was 32%, then it was raised to 42%, a sudden jump of 10%. But in 15th Finance Commission, this percentage was reduced by 1% and it came to 41%. Basically, 2021 is given as the interim report was presented, and same was continued for the period 21 to 26. So the 15th Finance Commission stood at 41% of transfer from center to state. Basically, the 1% adjustment what they gave, the reason for this 1% adjustment was to provide for newly formed UTs of Jammu Kashmir, Ladakh from resources of the center, because Jammu Kashmir and Ladakh became the union territories and the center has to support not only the states but UTs as well. So the resource need to be diverted there from the states, because they were not now the states, they have become the union territory. So the reason they gave was, that's why they are reducing from 42 to 41%. So this is basically what? This is vertical devolution. That means from center to state, the resources are being transferred. Then is horizontal devolution. That how these resources transferred from center to state, now how this will be given to states. What should be the criteria for distribution of resources? See, the 15th Finance Commission gave, these were the criteria for devolution, horizontal devolution. Let us discuss one by one. First was, I have given the weightage that was given by 14th Finance Commission just to have you a comparative analysis of how it changed to 15th. And 15th Finance Commission 2021 figures are mentioned just for the interim report what they have given, and for the financial year 21 to 26 these were the same, they were almost same, they were same as the interim report. First was the income distance. Income distance is basically what? The per capita income of the state from the state which has the highest per capita income. So that was given the weightage of 45 in 15th Finance Commission. The difference between per capita income of your state compared to the per capita income of the state of highest per capita income of a specific state, that relates to income distance. So you will be given more amount, that was the weightage was 45, more amount would be given so that the income disparities could be reduced. Second was area. Basically area covered, in 14th it was 15 and in 15th Finance Commission it was kept as 15 only. The area includes the area in which you are performing various functions, the state is performing various functions. If it is larger area, more resources would be diverted to. The population, earlier the population census, the basis was 1971, but for a larger period now it is 2011. The population in 14th Finance Commission was given weight of 10, which was increased to 15. Basically, a state with a larger population has more functions to disburse, more responsibilities, more headcount is there for various provision of goods and services. So it was given a larger proportion. The demographic performance basically means in 14th Finance Commission there was no demographic performance, but in 15th Finance Commission demographic performance was included. In demographic performance, basically the efforts undertaken by the state for infant mortality, for the fertility rate, longevity of life, whatever the provisions, the steps have been undertaken by the state, needs to be appreciated. So in 15th Finance Commission, a weightage of 12.5 was given to the states with who have performed well as far as the demography is concerned. The forest cover, it was there in 14th Finance Commission, but in 15th Finance Commission, they have given forest and ecology. The states who are maintaining their forests, who are protecting the environment more, would be given amount. According to that, a weightage of 10 was given to them, to this criteria. So whose ecological and forest cover is huge, who are maintaining their forest and green environment, were appreciated by this. Tax and fiscal efforts, basically in 14th Finance Commission it was not there, but in 15th Finance Commission a weightage of 2.5 was also given to tax and fiscal efforts as to what the state has undertaken, the process, the methods, so that the evasion is less, the avoidance is less, people are paying taxes, those attempt adhering to the fiscal discipline. The Center, so the Finance Commission appreciated that, those attempts, those methods, those measures undertaken. So a weightage of 2.5 was given. In such a manner, now the amount transferred from center to states on basis of these criteria was to be distributed. To quickly give you an idea of the grants, various heads in which the grants are being distributed as per the recommendation of Finance Commission from the center to state for a period of like 15th Finance Commission was from 21 to 26. It was revenue deficit grant. This all amount on the right hand side is in rupees crores. Revenue deficit grant was there, local government grant, urban local, rural, health grants were given, other grants, disaster management, these had a huge amount, sector specific grants were there, health, education, higher education, implementation of agriculture, maintenance of Pradhan Mantri Yojanas for roads, judiciary, statistics, aspirational districts and block, state specific grant. All these were given in the form of grants from center to state. So what I discussed, the criteria of federal supervision, the state center is giving them to state in the form of devolution, in the form of grants. The state have been given just distribution so that they can perform well. The 16th Finance Commission has been constituted on 31st December 2023, and after the 15th is over, the 16th Finance Commission has tabled its recommendation and it will be implemented. The chairman of the 16th Finance Commission is Sri Arvind Pangadia. He was the former vice chairman of the Niti Aayog, and these are the members of the 16th Finance Commission. Sri Ajay Narayan Jha, he was the former member of the 15th Finance Commission and former Secretary of Expenditure. Srimati Annie George Matthew, when it was constituted, I am telling you the members of that, she was former Special Secretary Expenditure. Dr. Niranjan Raja Dhyaksha, he was the Executive Director, Earth Global. And Dr. Soumya Kanti Ghosh, the Chief Economic Advisor of the State Bank, among the group of Chief Economic Advisor of the State Bank of India. It was a part-time member. So, at the time of constitution of the 16th Finance Commission, this was the constitutional arrangement that was given, and these members were the members of 16th Finance Commission when it was formed, and Sri Arvind Pangadia. The interim report has been tabled, and after the 15th Finance Commission term is over, for the next 5 years, the 16th Finance Commission would be functioning on the terms of reference of vertical devolution, horizontal devolution, grants. The terms of reference, as I told you, this time they are limited to mandate of Article 280 of the Constitution. What are these? How much of the central revenue should be devolved to the state? Vertical sharing, as I told you. Share of each state in the divisible pool, horizontal devolution, recommendation of grant and aid to states which need assistance, financial assistance would be given to them, and recommending measures to augment the consolidated fund of a state to supplement the resources of panchayat and municipalities in the state. So, the terms of recommendations, the criteria on which, the aspects on which the 16th Finance Commission would be placing its recommendation include all these. So, soon we will be seeing the full-fledged recommendations after 2026 of the 16th Finance Commission, and let us see what changes are being made in the vertical and horizontal devolution specifically. So, dear learners, these are the suggested readings. Hope you must have understood the Finance Commission, its working, federal finance, how the allocation is done. So, learners, thank you for today. We will be meeting in the next lecture.